Hi, thank you so much for that introduction. I'm Yamiche Alcindor, the White House correspondent for PBS NewsHour and a political contributor at MSNBC and NBC News. I'm so excited to be here. Thank you so much, RFK, for inviting me here. I'm so excited to be part of this RFK Spring Investor Summit. It's going to be a robust conversation that we're going to be having here. And with that, I want to introduce Afsaneh. Beschloss. She is the founder and chief executive of Rockcreek. Afsaneh, are you there?
Right here.
And Michael Frerichs. He's the treasurer of the state of Illinois. Michael, thanks so much, both of you, for being here. I want to start with you, Michael. President Biden just passed this $1.9 trillion mega package. It's a COVID relief package, but it's a lot of other things there. The White House is saying specifically that this is to help states and localities in the middle of a pandemic. Talk to me a little bit about what impact you might see this legislation have on your state and in the country as a whole.
Well, it's broad-based legislation, whether it be help for childcare, direct relief, help for pensions. One of the things I think you're asking about is help for units of government, whether it be states or municipalities, is something I have been pushing for a long time. It's been very clear that states, municipalities have suffered decrease in taxes coming in, mostly in terms of sales taxes, as you saw restaurants, bars, and early on, a lot of stores being shut down. At the same time, that healthcare costs had been driven up dramatically. It's clear the states needed help, not because of problems pre-COVID, because of problems caused by COVID. And I think economists who looked at how we responded to the Great Recession in 2008, 2009 through 2010, all said that one of the things that kept unemployment going on longer than it should have was lack of help for local governments, because those governments don't have the ability, like the federal government, to deficit spend like the federal government does. They don't have the ability to print their own money. And that meant that states, cities laid off employees. Many cities had to lay off firefighters, police officers had to lay off teachers, and that contributed to increased unemployment, dragging on longer than it should have. And so I'm glad to see that the Democrats in Congress and the Senate, along with President Biden, prioritize this spending, which should hopefully get us back on track sooner.
Afsaneh, Michael just said, hopefully this will get us back on track sooner. I wonder, from your perspective, as someone who really understands the market, understands the economy, how you see this bill and its possible impact.
Yamiche, delighted to be with you today and with the treasurer. And also, by the way, very auspicious day. This was the day that Robert Kennedy, I believe, announced his presidency. So we are on the anniversary of that day today. So interesting that the conference starts today. In terms of what the treasurer said, completely agree with him that this is a historical time. I think the amount of assistance through this rescue package that has just been through the Senate and the Congress and signed in by President Biden is going to make an enormous change, because what it is moving from is really two things. One is the scale and the breadth, and helping all the groups that got hurt, as the treasurer alluded to. Secondly, with recent announcements of people like Jean Sperling and others who are working to make sure we don't just have the right policy, we don't have the right financing, but there are elements in the government, in the new Biden administration, who also work hand in hand with the treasurer and other treasurers and other states and the rest of the government to make sure this money actually does get to the people who are most vulnerable, which was a criticism of past programs where there were large numbers, but they did not necessarily help the most vulnerable populations.
And what do you think, sticking with you, what do you think this will mean for private investors, for the investor space, for private markets?
We've seen already the impact. Markets have been very, very positive. And what you saw is not just the run-up in the stock market, but if you look at the expectations of growth, let's say for the US economy, that were sort of in the 5-ish range, it has gone up to anything between 6 and 8%. We at Rockcreek think maybe closer to 7% with actually upside risk, which is a good thing. And so growth rates in America will be higher, which means that also companies' profitability will be higher. And if we move towards a more multi-stake vision of our economy, and everybody benefits from these programs as infrastructure investments also kick in. I think it could be huge in terms of the amount of opportunities that private investors get, Yamiche. And specifically for institutional investors, we work closely with, for example, Illinois. We work with some other states. We work with universities and foundations across the board. I think what you're seeing is a move towards, for example, not just equities and bonds, but a lot of the intersection between technology, health, and education, better affordable housing, more financial inclusion. So all the areas that fall into more responsible investing are also the ones that are probably going to be the highest return investments for investors looking into the markets right now.
Mm-hmm. And Michael, I want to come to you talking about markets. Something, of course, on top of a lot of people's minds are pension funds and retirement funds. Tell me a little bit about how this pandemic has impacted pension funds in light of the fact that some of them were underfunded. What's going on?
Well, I would say this last year has been good for those who invest in the market. After seeing an initial drop off, I think we've seen somewhere around a 20% return on the market. That is helpful to pension funds. A lot of pension funds like Illinois started the year way behind. This legislation is not going to be used directly to help those pensions or to bail them out. No one is asking for that. But because there'll be less pressure on other state funding, it'll be easier to make our required contributions in the pension fund. I'm not an expert on multi-employer plans, pension funds, but my understanding is a lot of those also have issues with underfunding. And there's money in this legislation to make sure that money can go to help shore them up. Now, that's good for those funds, but it's really good for their members, for their retirees. You know, if we leave our seniors, the ones who are retired, don't have the ability to really return to work and earn money, if we leave them in a more precarious position, then you're going to see a drop off in consumer spending. And we all know that our economy is driven about 70% by consumer spending. You know, in the course of this pandemic, we saw great gains for those who owned a lot of stock, but a lot of Americans, over 50% that don't, really were the ones that were hurting. And I believe this legislation is targeted to help those individuals. But if they are then in turn able to make their rent payments, if they're able to continue to increase their levels of spending, those invested in markets are going to benefit as well. I really do believe in this case, a rising tide will lift all boats.
Afsaneh, I want to come to you. Last week, the Department of Labor announced it would stop enforcing the Trump-era rule that would have required fiduciaries to base their investment decisions solely on financial returns. What impact might this move have, especially when you think about environmental, social, and governance factors and how they relate to this change?
Yamiche, I think it's really interesting that this has happened. The timing is really important because just before the end of the year, a lot of corporate investors, a lot of institutional investors were really getting concerned as they wanted to actually invest in highest return, let's say renewable projects, climate-related investments based on financial return, because they also had these ESG attributes. There were questions as to whether they could really do it. So that old legislation, I think, was very counterproductive, not just from the point of any politics or belief or lack thereof, let's say in climate change, but purely by limiting investors in finding the best opportunities. The way I differ, I think, from sort of maybe the general thinking on this topic is that I believe that ESG is actually very consistent with getting financial returns. In fact, in order to have the highest financial returns moving forward, if we are not sensitive to things like the climate or things like affordable housing, we will end up actually in worse investments. Look at last year. Commercial real estate did really, really badly. It probably will not exactly go back to the past as people will continue to work remote, but affordable housing did well. Financial inclusion tools that help getting financing to smaller businesses will do well, I think, particularly with the new plans. And then, of course, with renewable energy, oil prices have gone up to the 60s, and so not just the fact that the U.S. can produce more energy more economically, but particularly renewable energy in the U.S., Europe, and the rest of the world in emerging markets can really make a big dent as a return-producing investment, not just putting ESG on this side and financial returns on this side. I think the two will work really nicely, closely in touch together.
Michael, what do you make of that and this, what we're talking about ESG and the factors here and this ruling?
I was so very excited to hear the Biden administration was going to make those changes. I, along with several other state treasurers and many other investors out there, signed letters calling on the SEC to not implement these rule changes. We feel that they were rushed through, and quite frankly, we don't understand why. If you believe in capitalism, if you believe in free markets, then the best way to operate is with transparency and openness. You should be able to have access to information. We felt that they were trying to hide some of that. It's kind of like playing poker, but not being able to see three of your cards, the E, the S, and the G. There are risks under those cards. If you can't see them, how can you make a good determination? Basically, then you are just blind gambling, and investors don't want to be in that position. We may be able to see two of our cards, and that's traditional financial statements, and that is very helpful to determining our decisions. But we would like to know more to minimize risk, especially fiduciaries who are taking a long-term approach. Mm-hmm. When we are in charge of pension funds, retirement funds, college savings funds, these are places where people are investing for 10, 18, 20 to 30 years. So we want to make sure that our investments are profitable. We're not day traders here. And we kind of felt that the Trump administration's rules and guidelines were detrimental to the free exchange of information that make markets work and that give folks like us the ability to make solid, long-term, sustainable investments.
Afsaneh, Michael's talking about this idea that rules can get in the way, that they can even be detrimental to prosperity. I want to talk to you about whether or not you think the current administration can update maybe some antiquated laws that were aimed at stopping corruption, but maybe are getting in the way. What do you see in that space?
I think we're really fortunate that the group of people that are coming in with the president are really very experienced, both on the private sector and public sector. You've got people like Gary Gensler, who has worked in the private sector, but also had a regulatory job in the past, and hopefully will get confirmed very soon, if not already, for the SEC. That is really important because, again, the push is exactly what the treasurer just said, for more transparency on information, whether it's on political donations, whether it's on areas related to climate change, and other areas. So having that transparency is really the job of the regulators. There is always been criticism that that Republicans have been more pro-market and the Democrats have been maybe putting in more regulation that limits things. In fact, I think the jury's out, and especially looking into the future and the kind of people who are stepping into the government. I'm personally very, very optimistic that we will have the kind of regulation you need to make sure vulnerable populations are protected, so that, for example, the things that we saw with the very fast trading does not harm people who may not realize exactly how the system works, versus providing the transparency needed, particularly for the large firms, so that they actually show what the diversity of their firm is, actually not hide it. Show again, as a source of return, show what they're doing in the areas that they give speeches on. And I think that is a very positive thing.
Michael, I want to turn to you as a bit of a subject change. The country has been undergoing this racial reckoning after the death of George Floyd and Breonna Taylor and Ahmaud Arbery and so many others. What do you think this racial reckoning, as well as this awareness of the inequality that really is functioning in our society, what does it mean for the business community and its ability to direct more capital to communities of color?
Well, you never want to say that these tragedies, these events have a positive outcome, but my hope is they have sparked a dialogue that's going to have a positive outcome. I've seen a big change in this last year. When we came into office, I recognized the value of diversity. whether it be working with diverse asset managers, diversity on corporate boards. We think these things are good for business, and we have plenty of data that backs this up. But we didn't always find a lot of willing partners out there. I heard too much, oh, Treasurer, you're pushing your liberal agenda. You're pushing quotas on these corporations. No, I was doing my fiduciary duty. When data shows that diverse boards outperform homogenous boards, why would I not want to make sure the boards that companies were investing in have more diversity? Or at least some diversity out there, because homogenous boards become an echo chamber. They're full of yes men, and that's not a way to make sure the company is planning well for the future. So we're very active, and we now lead the Midwest Investors Diversity Initiative, using pooled resources, pooled assets to call on Midwestern-based companies to make sure they have diverse boards. It wasn't always so easy. But I will say one upside of the events of last summer and the marches and the movement and the dialogue is that we found more people who are now taking stock of this. They're willing to listen to this, they're more open to the data we're providing. And so I do think that there is improvement. We have a long way to go, but I'm hopeful that we're at least taking steps in the right direction.
And Michael, I want to stick with you because I think what you're saying is something that's so important, which is it took, in some ways, the death of this man in Minneapolis, George Floyd, who's an officer, kneeled on his neck for 8 minutes and 46 seconds. We all watched this terrible video. What does it say to you that it took that kind of really visceral, terrible video to move people away from the idea that diversity was sort of a liberal agenda and that it actually was beneficial and that we could have those conversations openly?
Yeah, I think most people watching this will realize that what happened to George Floyd was not unique in American history, not unique in contemporary history, but things like that weren't caught on camera. And for the nearly 9 minutes that officer knelt on his neck, Americans couldn't look away. You just couldn't believe the inhumanity, and it caused us to really sort of evaluate. Not that these things hadn't happened before, but they hadn't been caught maybe in such graphic honesty for so long. And so, yeah, it's disappointing that it took that to bring some people around. But like I said, I am happy with the conversations. They are of a different nature than they were when I first came into office 6 years ago. There is more openness and receptivity that people now, we would make the case before that this was data driven and that we're pushing our roles as a fiduciary. And I saw eye rolls and I got a lot of pushback on talk radio. It has changed. Things are improving, but we need to make sure that this isn't just a one-off where corporations decide to give their employees Juneteenth off and think, hey, look, we've done something. No, there needs to be a committed and sustained effort, and investors like us and managers like Afsaneh need to make sure we hold people accountable and that we're constantly checking in to make sure that it's not just a one-off.
Afsaneh, I want to come to you. What do you make of what we've been talking about, this corporate interest in diversity? What do you say about it? And I wonder if you could comment a little bit on Michael's point, which is, is it going to be that maybe people get interested in this and people get Juneteenth off, but there is an actual change that comes from this?
So I want to be very optimistic, like Michael, and he has been pushing, I think, for DI and inclusion really long before, and really, I think in Illinois, there has been a lot of progress. But this is so patchy still. There's so many states, there's so many corporations, so many foundation endowments where conversations are taking place, Yamiche, but in practice, very little action is getting implemented. And that is my concern. I find, again, just one simple fact, we've invested more than $6.5 billion since we started our firm in Black, brown, women, and Asian and other minority investors, investment firms. Now, that is a number we're very proud of, but we wish we could do even more. But what I still see is that many, many firms, again, are, as Michael said, coming in, giving the staff a day off or hiring a diversity officer. My question is really exactly what he's talking about, which is we need this data to be out there. We need every large investor, and a lot of them are present at this conference, needs to make sure they provide their own data and what progress they're making. But then if they're investing in a fund or they're investing in a company or in a new venture, they also get that data. And I think the data and again, the data that we measure, we create indices looking at Black managers, at women managers, in different areas, in equities, in bonds, in private equity, in venture. And the data speaks for itself. There is really huge benefits from diversity in investments. At the same time, if that data becomes more mainstream, if it becomes available to everyone, then hopefully the naysayers who have had, whether it's unconscious bias or just not being aware of the data, will become more aware. And I think if we can put all our efforts in getting these data platforms so that we can be more convincing to the others, we will actually have more change in front of us.
If I can just can I add something there? I made the comment about Juneteenth, but the other fear I have is that some asset managers will say, oh, well, we need to invest in some diverse firms, and they'll put $5 million for Afsaneh to manage in her firm. But then they'll give $100 million to a traditional firm they've used before and they'll say, look, we're using more diversity. I find there's this problem out there too, that some investors, some funds will look and say, oh, well, they're a diverse manager. We've given them some, but we can't give something bigger. There seems to be like some limits out there. We need to really look and see what percentages they're giving and make sure that it's not tokenism, it's not crumbs being dispersed.
That's so important.
That's a very important point. Afsaneh, I want to come to you for this question. We only have a couple minutes left before we go to Q&A, but in the time that we have left, I want to talk about immigration, because this conversation that we're having about diversity, about embracing all the different kind of inequalities that we've been talking about in our country, immigration is also center of that. There has been this narrative that especially I'm working on a story right now where there are lawmakers and others who say immigrants, especially ones without legal status, they take more from the economy than they give. I wonder what you make of President Biden's plan to give a pathway to citizenship to most immigrants in this country without legal status, and what that might do to the economy.
So I think two things. One, just for transparency's sake, I am an immigrant myself. I came to the US when I was 16 as an exchange student, got educated in England, and then came back to the US. And as an immigrant, I could not be more grateful to America for the life that I have had, that my family has had, and really all the people that I work with. And so I can, I'm on the side that immigration actually is a very positive thing. If we look at our history, we're all immigrants in the US, really, with the exception of, people who might have come much, much earlier to the US. And if we could, again, going back to the discussion we just had with Michael on diversity, one form of diversity is immigration. And let's not forget, the periods of highest growth and productivity in the US were also consistent with periods where we had better immigration policy, where there were more immigrants coming. As we speak right now, because of the lack of immigration, there is so much shortage of labor to do so many things, whether it is in agriculture. We see these food shortages going on. We see all kinds of shortages that are in very specific areas that are very immigrant related, whether they are high-skilled AI or they are in agriculture or in housing. And so we cannot have this kind of growth that we hope, the 6 to 8% growth we talked about, 1 trillion to invest in short term right now, and 2 to 4 billion to invest in our infrastructure, and not have enough really good labor force to help push it through. So I am very much in agreement with President Biden's policy to get a path to immigration. It will help with so many things, including our crime, including social issues, including health issues. And let me stop there.
Michael, what do you make of the plan to try to get as many immigrants without legal status on pathway to citizenship? That's President Biden's plan.
Yeah, I agree mostly most everything Afsaneh said. If you bring people out of the shadows and they're participating in our economy, if they're paying their taxes, if we get people off of cash books, if people are comfortable to actually organize as workers, I think you're going to find better workplaces, better workplace protection. The last time we really did this was under President Reagan. And I think you saw most conservatives would say the economy was doing fairly well after that. They just don't connect the dots. They don't connect that. But I think that this is going to ultimately be good for the economy and good for our markets.
And with that, I'm going to now take it to Q&A. Thanks so much for answering my questions. I know there are people that are watching that have questions, so we're going to bring in, and we're going to now go to that. So I think.
Yes, we have a number of questions coming in. This is such a really engaging conversation. So I'm just going to read off a few. We have one that's coming in that says, how are publicly traded companies that have made contributions to state legislators that are now proposing voter restriction laws, specifically in Georgia and Arizona, being held accountable, especially if these companies have made statements supporting Black Lives Matter in the past? That's a heavy one. So that's one. There was one question around the comment, I believe Treasurer Frerichs mentioned about all boats rising. How does all boats rising help to close the racial wealth gap? Another question coming through, the Biden administration is speaking a language of unity, of hope, and inclusion. The Trump administration's mantra was America first. Practically, how do you think the Biden administration will translate this mantra or this language into initiatives and measures that boost employment and build unity in the country?
So maybe we'll let the state treasurer. You want to take the one that was directed at you, Michael, and then we could go around.
I think this the one about all boats rising. How does that close the wealth gap? Yeah, I think that the stimulus bill that was passed largely by Democrats in the House and the Senate, and we call the Biden stimulus bill, the $1.9 billion, was focused on closing some of those, some of the inequality out there, some of the traditional forces out there. My point in saying that rising tide lifts all boats is for those who say, oh, well, it's helping the poorest among us. First of all, I don't think that's such a bad thing to do. But two, if you think that this is only helping those, if those people then are able to pay their rent, if they're able to go out and shop and purchase, that is good for the entire economy, and that's going to help everyone. I don't think the purpose of the legislation is to help the venture capital funds, the private equity managers who have a lot of money, but they shouldn't worry that it's going to be harmful to them. They're going to see benefits as well. That was my only point.
And it sounds like you're saying
addressing child care and some direct payments to lower income people, tax credits for families, does help address that equity gap.
And it sounds like you're also turning that phrase on its head, because I think a lot of times when people use that phrase, they're saying, well, if you help the wealthy, the poor will also be helped. In this case, the Biden administration is really touting this $1.9 trillion bill as helping the poor. And you're saying if it helps the most needy among us, the most vulnerable among us, it will likely also help other people with that group. So that's an interesting way to look at that.
As opposed to the trickle-down theories that have been espoused for years, and no one's really seen the benefit at the lower end. I do think in an economy that's driven by 70% by consumer spending, pumping more money into the bottom percentages will trickle its way up.
So instead of trickle down, we have trickle up economics. The leverage effect and multiplier is so much bigger on that. Really, seriously.
And Afsaneh, did you hear a question that you want to take? I know there was the voting rights question, but there was another question as well.
I think it goes back to what our earlier conversation, Yamiche, in the sense that what we talked about data, right? So if the SEC and Gary Gensler do require more data from companies on what your political giving is, but also what you're doing on the environmental side, which is risk management, right? Every insurance company in this country, if they want to survive, has to do their own climate study and risks. Otherwise, they will be dead. They won't exist if they haven't already been affected. They certainly won't be around in 10 or 20 years. So those are all musts for us, and goes back to that whole point that Michael was talking about, data on everything, and similar on diversity. So if somebody's making speeches every day at conferences about those things in one group, and say something different or acts differently on the redistricting or other areas, once you have transparency of that information, that whole package is out there for the world to see. So I think transparency and data are good in every single way, politically, economically, for investors, and really for any decision maker. The other thing I wanted to just touch on, if I may, is sort of the whole point about unity and America first. In fact, if we look at President Biden's program, it also, while it says America first, it also says every human being first. And I think this point that Michael said about trickle up is really, really serious. So in our own country, we're saying it's not, the benefit of Wall Street cannot directly impact Main Street, as we've seen. The Federal Reserve, Jay Powell has now been talking more and more about equity. Which Fed chairman has been talking about equity the last 50 years, right? It's not something Fed chairmen normally talk about, but it's got to a point where all this money that flows in 2008, in 2020, creates a huge amount of wealth and has made disparity worse. So unless President Biden, with the plan that he has got and his team has got, can really change that around and in practice make sure that money does go to the most vulnerable, to the lowest income, to the various races and genders in our economy, I think we will have a problem. And let's not forget, while he's saying that, he just met also with China and India and created sort of this quad group with Japan to help developing countries also access vaccines. On trade, there's a lot of inequity that has been imposed on the whole world because of China. And I think President Biden is very much addressing that. So he is putting America first in the sense of making sure that he's looking after the citizens of the US. But how can you look at the citizens and say life goes back to normal if COVID is rampant in other parts of the world? How can we start traveling and do business and grow our economy and sell our goods abroad? So he understands that. And I think that is a huge difference as compared to a few months ago.
I think there are huge differences there. I couldn't agree with Afsaneh more. I think it goes back to what ESG is. It's acknowledging that there are other stakeholders out there other than just ourselves. And if you apply it the world stage, there are other countries we have to work with. I like to tell people the analogy that if I'm part of a family and I have a Michael first approach, that I'll decide what we have for dinner, I'll decide what we watch on TV, I'll decide where we go on vacation. I may maximize my enjoyment in the short term, but in the long term, it's going to be really bad for me. I'm probably going to get divorced. My kids aren't going to want to be around me. We have to consider other stakeholders as well to maximize our own enjoyment and benefits out there. I think that's the real difference you see with ESG as well. If a company only focuses on profits and doesn't pay attention to their workforce, their communities, the environment, you can make a profit in the short term, maybe more easily, but long-term sustainability is going to be much more difficult.
Absolutely.
Are there other questions? Oh, I'm also really interested in the voting rights question. I know we only have about 2 minutes left, but Michael, as someone who's in state government, I wonder if you could talk a little bit about these voting rights legislation. And I've been talking to Democrats who say that because the legislatures aren't really going to be impacted as much by pressure, that it really is going to come down to an economic conversation about states being pushed that way. What do you make of that?
Yeah, I'm going to be a broken record here and say I agree with what Afsaneh said before here. It's about data, it's about information. And that's what we're requesting. We can't make good decisions if we don't know where money is going, how it's being spent. We signed a letter along with the Service Employees International Union calling on these companies to disclose their contributions. We can't really know who's doing what until we have more information. But I think that if you are contributing, if you're someone who's contributing to a destabilization of our government, of an erosion of our democracy, that is going to have consequences to our markets as well. Part of the reason a lot of capital flows into our country is we've been viewed as a safe investment, as a stable country for a long time. Unfortunately, those events of January 6th, I think, gave a lot of people pause. How stable is American government? And that has potential to have long-term negative consequences for our markets. So I think this is something very important, and I think we should have more disclosure.
That's really a great point. And I heard you have to, even virtually, I heard you agreeing with that. Is there anything you wanted to add?
No, completely. I think agree and nothing to add. And as Michael said, I think also January 6th is a really important day in our history. And just as you know, the other states in summer and really many of the other anniversaries we're observing today should remind us that this country is built on the idealism of its founders and of the people who are living here today and are choosing to come into this great country and build a life for themselves, but also build a life really for a better world all around them. And I think, you know, hopefully nothing untoward will happen with the voting rights that will affect not just those particular states, but the impact of those few small votes can be huge for the rest of the world.
Well, thank you to both of you. That's a great way to end, talking about the importance of American democracy and the fact that it's really held together, as you said, by the idealism of our founders and by the idealism of all of the people that are living here, that are continuing to make the choice to be here and to treat other people fairly. I think that's an incredible way to end this conversation. So thank you to both of you for answering my questions, for answering the audience's questions. And thank you, RFK, again, for allowing us to have this virtual meeting to be able to have these conversations.
Thank you, Yamiche.
Thank you, Yamiche.
Thanks.